A warm welcome to you, my dear children. Welcome back to the second session of Unit 6. Second session of Unit 6. Those who can remember what unit, which one are we in? Let's remind ourselves the unit that we are doing. Unit 6, dual impact, that's right. We are in dual impact of transactions, and we have already done how to record the dual impact of transactions under the accounting equation. Yeah, and in the previous session, you may remember, well, you can't forget these things, right? No. In the previous session, we discussed how to record the dual impact as double entries. Yeah, as double entries we recorded under the accounting equation. And I told you that recording the dual impact of transactions, each and every transaction, under the accounting equation is not practical. I told you that it's not practical. Yeah. That's why, as a accepted practice, we use the accounts to record these impacts of dual impact of transactions. And in the accounts only, we record the double entries now. Right? Remember? Now we have a free space for us to draw the format of ledger accounts. Alright? But going back to the last slide, last screen of the previous session, we read the given passage, the given explanation in your textbook. This part is from your textbook. And it says here, an account is a commonly accepted structure that is used to record the change, increase, decrease of an asset, equity and liability. That is used to record, this structure is used to record the change, might be an increase, might be a decrease of assets, equity and liabilities. Furthermore, incomes or expenses. And these accounts are prepared by us and we record the double entries of transactions, right? In the coming few sessions and well up to the examination, you will be preparing hundreds of these type of accounts. Do you see it clearly? Observe. Look carefully how the account is structured, how the account is drawn. Let me give you a simple hint. I'll give you a simple clue. Children, these accounts are known as ledger accounts. These are known as ledger accounts. Okay. The word ledger may not be familiar to some people and maybe familiar to some others. But let me explain. These accounts are known as ledger accounts. I'll just write the word here. Okay? Can you see that word? It says ledger. Ledger accounts. These accounts are known as ledger accounts. Why? Because in practice, in real life, in real businesses, children, the transactions are recorded, the double entries are recorded in these accounts, right? In these accounts. Like, make no mistake of that. Make no mistake, all the transactions should be recorded in these accounts, right? But why do we call these accounts by that name? Why? Because in real life, in real businesses, children, all over the world, this system is used, the double entry system, to record transactions. And transactions are recorded in these accounts. These accounts should be drawn. These accounts should be drawn. These accounts should be drawn, right? In books. Well, traditionally, the accounts were drawn in books. Not anymore. Now, businesses, they do not use books to draw these accounts. Okay? Now, businesses nowadays, they don't use these books to draw these accounts. They use computers. All right? These accounts are now stored in computers, and double entries are recorded in a computerized system. But you can't do that. You students, you are learning this system and learning how to record in accounts. So you should do it in books. In exam, you can't just say, dear examiner, sir, I haven't actually paid attention to learn how to record in books because it's not practical nowadays. Nowadays, all the accounts are prepared in computerized systems. So I will not prepare these accounts or do these questions. Thank you. Well, you can't say that. You have to prepare these accounts. You have to prepare. You have to draw these accounts. Okay? Right? That's what we are going to learn. And in the traditional, according to the traditional method, the accounts were drawn in large books. All right? There were large books, like very large books. There were large books used to record, used to draw these accounts, all right? Most of the time, one page of these books are used for one account. That's how the books were used, right? And the books were large books, spiral binding in the middle. All right, I'm just showing you how a ledger book looks like. All right, spiral binding in the middle, large books like this. These books which were used to draw these accounts, these books were named as ledger books. The name of these books were ledger books, right? So now you can think of, now you can guess why the accounts are known as ledger accounts. This is why the books were called ledger books, and the accounts which were drawn in the books were obviously called ledger accounts because of the name of the books, ledger books. All right, that's a little bit of history. Okay, most of the businesses nowadays, most of the businesses do not use ledger books. These ledger books are not used by most of the time. But we have to learn how to draw accounts, ledger accounts, and how to manually record transactions. Can't help it. Alright, this is the learning time. Alright, so this format is globally used and we too as students use the accepted format of ledger accounts and we record double entries. Right? Children, a ledger account is easily drawn in the format or in the shape of a capital T letter. A ledger account is easily drawn in the shape of a capital T letter. See? Can you see the T? This is the T, children. This is a capital T letter in English alphabet, right? See the T? It's the shape of a capital T. Then you can divide your left hand side columns and right hand side columns. Alright? One column for the date, one column for description. There's another column for ledger folio, which will not be used much. Okay? And finally, value column. Alright? So, this is the left hand side. Right hand side also the same. One column for the date, one column for the description, and a small column for ledger folio. Finally the column for value. This is the format of a ledger account. You must practice to draw this format. I advise you, when you draw ledger accounts, I advise you to draw the T format first. Draw the T first. It's easier then. It will be easier for you then. Up to you. I'm giving you an easy method to draw ledger accounts. You draw the T format first. Okay? When you draw the T format first, how does it become easier? Well, when you draw the T format, children, it becomes easier because the two sides are equally divided by the T. Huh? Before you divide any columns, before you draw these columns, just draw the T first. Okay? Then you divide the left hand side into 4 columns, right hand side into 4 columns. Okay? The columns come in this manner: narrow column, wide column, again narrow column, wide column. Remember it like that. Narrow column for date, children, it doesn't matter whether it's narrow or wide, but just to make it easy to remember. Narrow column, wide column, again narrow column, little wider, wide column. Alright, 4 columns on the left hand side, 4 columns on the right hand side. 4 columns on this side, 4 columns on this side. Easy. Right? But it's not over. We use names for these two sides. We use names. We call the left hand side debit side. Debit. Left hand side is known as the debit side. And we call the right hand side credit side. All right. Okay. We call the left hand side debit and the right hand side we call it credit. Okay. Practice with me. Practice with me. Debit on the left, credit on the right. Okay. The two sides. Debit on the left, credit on the right. Debit left, credit right. Debit left, credit right. Don't get confused between debit and credit. If you put credit here and debit here, end of story. All your accounts will be wrong. So say it with me. Debit on the left, credit on the right. Debit on the left, credit on the right. Debit left, credit right. Debit left, credit right. Okay, we'll draw one ledger account by ourselves. Right, now tell me how to draw a ledger account. Tell me, what should I draw first? What should I draw first? What should I draw first? The T. That's right. I should draw the T first. The T. All right, here you go. Vertical line and horizontal line. T. This is a T. Now what you do is, you separate the columns on left side. Left. Debit side, that's right, debit side. Debit on the left, okay? You separate the columns on the debit side. Narrow, wide, narrow, wide. Okay. Now to the credit side. Narrow, wide, narrow, wide. All right. Okay. And the header, the heading row. You draw the heading row. You put headings no? On the top. Okay, on top. Headings. Now you tell me the headings. Tell me the headings. What is the first column? What is the first column? First column. First column. Value? No. Date first. All right. Date. Second column. Details. You can say description. You can say details. Doesn't matter. Third column. Ledger. Folio. Ledger folio. Fourth column. Value. You can just put the rupee sign. Doesn't matter. Okay. Just put the rupee sign. It's okay. Again onto the credit side now. Same columns. Date, details, ledger, folio, and rupees. Value column in the corner. Okay. Are you clear with this, children? All right. Okay. Another something that you should be aware of. You should be aware of. Okay. Every asset has an individual account, which means for every asset you should draw an individual account. For every liability you should draw an individual account. For every income, you should draw an individual account. For every expense also, you should draw an individual account. How many accounts are we going to need? Many. We'll practice with many accounts. Right. This is the format of a ledger account, children. The format of a ledger account. We'll name this account. We'll name it cash. Cash account. So if I ask you what type of an account is this? What type of an account? Yeah, I know. It's a cash account, okay. But what is the type of this account? What is cash? What is cash in the business? What is cash? Cash is a liability? No, children, cash is an asset. So this cash account becomes automatically it becomes an asset account. This becomes an asset account. It's an asset account. Okay. Likewise, not only this, you will have many more asset accounts like building account, furniture account, equipment account, motor vehicles account, machineries account, debtors accounts. There will be a number of debtors, all assets, and all should have separate accounts. Don't be scared now. Don't be scared now. You will not get like 100 or a large number in your exam to draw, but you will definitely get these ledger accounts, and double entries will be tested. Your knowledge of double entries will be tested in your examination. Okay, for that we have to practice. We'll do it. Take it to your heads, children. The format and the drawing of ledger accounts are up to you. Practicing is up to you. I will show you, I will teach you, and I will give you more exercises, more transactions, more model questions. We'll do. You can do it with me, but practicing the accounts at home is up to you. More you do, better you become. All right, types of ledger accounts. Now we already drew, we ruled one account. That's how you say. You don't say drawing accounts. You say you are ruling accounts. You ruled. Ruling means drawing the format. So we already ruled one account, and that is a cash account. So I told you it's an asset account. Likewise, children, there are more types of accounts. The main types are asset accounts, like the cash account. Then we have liability accounts. Liability accounts. Bank loan account, creditors accounts, electricity expense payable accounts. We have liability accounts. We have equity accounts, capital drawings. These are equity accounts. Then we have income accounts, sales commission account, interest income account, and finally we have expense accounts. Yeah. salary expense, insurance expense, electricity expense, so on and so forth. Many expense accounts are there. But basically, children, how many types of ledger accounts should you remember? How many types? 1. Asset accounts. 2. Liability accounts. Asset accounts and liability accounts. 2. Equity accounts. 3. Equity. With that we have 3 types. Then 4. Income accounts. 5th one, yes, expense accounts. There you go. How many types? 5 types. 5 types of accounts are there. Okay. Okie dokie. Let's draw some accounts and let's learn how to record transactions. Shall we read this text, children? We already discussed that assets, equity, liabilities, income and expenses arise due to business transactions. And accounts are used to record these changes in changes happening due to transactions. All these accounts can be classified into 5 types. There you go, 5 types. 5 types. Okay. The picture even shows can be divided into 5 as assets, liabilities, equity, incomes and expenses. Alright, so 5 types of accounts. And it says, when recording business transactions in accounts, the value of a transaction should be either recorded in the debit side or credit side of the relevant account. That's something interesting. Let's learn about it. How to record transactions, double entries in accounts. What do we have here? It says, due to transactions, the increasing and decreasing of values of assets, equity, liabilities, income and expenses. Due to transactions, I'm repeating, increasing and decreasing of values of assets, equity and liabilities, income and expenses, increasing and decreasing. We learned how to, we discussed, right? Increasing and decreasing. Assets and liabilities and equity, plus incomes and expenses are entered in the ledger accounts. Previously, we learned how to enter under the accounting equation. Now we learn how to enter in ledger accounts according to the double entry principle. Now what is that? Double entry principle. Double entry. That's what. This is what. Right at the beginning of this session, children, this is what I mentioned. This is the basic, fundamental principle of accounting, double entry principle, which is used by accountants, bookkeepers, to record transactions. And I said, if you become a professional related to accounting, accounting professional in the field of accounting and finance, you will be using this system, the double entry principle, the basic fundamental rule, theory, for the rest of your lives. Didn't I tell you right at the beginning? Not this session, the previous session, when we started this lesson, Unit 6. That is what is given here. The double entry principle, the fundamental rule for the principle of accounting and bookkeeping. Let's see. Children, the types of accounts are given. Types of accounts are given in order. 1. Asset accounts. 2. Liability accounts. 3. Equity. 4. Income. And 5. Expense accounts. Now what is here? It says increase debit, credit, 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 debit. Decrease credit, credit, debit, 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 credit. What does it mean? My dear students, I told you that every ledger account is drawn with 2 sides. Okay? Every ledger account is drawn with 2 sides. Debit in the left, credit in the right. Debit left, credit right, debit left, credit right. How do you know on which side to record when a transaction is given to you? Whether to put that transaction amount in the debit side or whether to put that transaction amount on the credit side? How do you know? This is how you know. In the different types of accounts, different types of accounts, children, has a specific side to record an increase and a specific side to record a decrease. Increase, decrease. According to that rule only, you record these transactions and double entries of transactions in these accounts. According to that rule or the principle, which is the double entry principle. Okay. The double entry principle says asset accounts, if assets increase, these asset accounts must be debited. Or asset accounts, if it is an asset account, if that asset increases, that increasing value should be put to the debit side. If the asset decreases, that decreasing value should be put to the credit side. So asset accounts, if you are having an asset account at hand and you don't know how to record, let's take a transaction. You don't know how to record owner investing cash to the business. Owner has invested 100,000. 100 cash comes into the business. 100 cash comes into the business. So cash is an asset and you have a cash account drawn here. You have a cash account drawn. Okay. You don't know whether to put to the debit side or whether to put to the credit side. This 100. Oh, we forgot one thing, right? Children, we haven't mentioned the debit side and the credit side. Critical mistake. So you will learn from this mistake that You should never make this mistake again. Mention the debit side as DR, credit on the right. Let's erase this. Remember, never to make that mistake. Which mistake? The mistake of not mentioning debit and credit. Alright, so we'll do it now. You should put DR on the debit side, okay, and CR on the credit side. Debit, credit. Likewise. Now you don't know how to record that 100, the 100,000, which the owner brought into the business, cash which came into the business. Because of that investment or the owner's capital, cash came into the business. So the cash which the business already had, now that with that amount, cash in the business has increased. Which side to put this 100? In the cash account. Well, you refer to the double entry principle. If it is an asset and if it is an increase, should be put to the debit side. Yeah, so this is the debit side. You put the 100 here. And how to fill the date and the details and ledger folio, we'll learn. Just to show you how that debit credit rule is applied, I took this transaction, example transaction, owner investing 100,000 into the business. You can't just stop by putting the 100 in the asset account, in the cash account. You can't stop because you have to enter two entries, children. Double entries. What is the meaning of, what is the name of this system? Double entry system. You have to record double entries. There, you can't just put one debit entry and think that it's finished. The transaction is recorded. If one entry is on the debit side, there must be another entry on the credit side. Okay, that's how you record the double entries. That is the meaning of double entry system. One entry should be entered in the debit side of an account and the same amount entry should go to the credit side of another account. Double entries. Okay. For that, what you consider is, you consider how the transaction affected the accounting equation. What were the increased component and what was the decreased component? The dual impact. That's what you consider. So, if we take this, the transaction or the example we took, right here, the example we took, which is the example we took is owner investing $100,000 into the business. if we take this transaction, the same transaction, if we take the same transaction, you already recorded one entry as considering the assets, right? Considering the cash which came into the business, because the cash increased, you looked at the double entry principle and you saw assets increase should be debited, and you put to the debit side of that cash account this one, debit side of the cash account, and now you are wondering which account should be put to the credit side, in which account should be put to the credit side. To decide that, I told you to consider the dual impact. Cash increased under assets, and what is the other component which increased? Capital, because the 100 was brought by the owner. Cash increased, capital increased. Then the other component should be capital. You should draw a separate account called capital and look at the double entry principle. Equity. Double entry principle for equity. Equity accounts increase should be credited. So then you draw another account and name it as capital or equity account. Narrow, wide, narrow, wide, narrow, wide, narrow, wide. Easy, right? You name the account as capital account. And put to the credit side this 100 to the credit side value column. Date, details, value. Again this side, credit side, date, details, value. You put to the debit side and credit side. Same amount is recorded in two accounts. One account debit, other account credit. This is how you record transactions and the dual impact of transactions in accounts. Right, children? Don't you notice something that is missing? All right, I'll move to this side. Don't you notice something that is missing? A mistake we have done. We learn from the mistakes. That's how we learn. What is the mistake? In this account, in the account below, the capital account? Yes, good. You notice that. We didn't name the debit side and credit side. We didn't name the sides. That was the mistake. That is our mistake. Should put DR on the debit side and should put CR on the credit side. DR, CR. Debit on the left, credit on the right. Debit left, credit right. Children, likewise, now we have learned the double entry principle. which is here. And we recorded one example transaction according to the double entry principle. And we observed how the debit is recorded and the credit is recorded in two separate accounts. Same transaction, same amount going to two accounts. One account into the debit side, the other account into the credit side. This is the double entry system. An introduction to the double entry system and demonstrating how it is done. Remember the double entry principle? The double entry, some call it the rule, the double entry rule, and memorize the debits and credits. That's up to you. Memorizing will make it easy to do your accounts better. Okay? With that, children, we wrap up today's session recording transactions in double entry accounts. In the next session, I will be doing more exercises, more transactions, recording the double entry accounts. So I hope to see you soon. Thank you very much.